I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Mike Swanson, editor of WallStreetWindow.com. Welcome back to the show.
Oh, it's great to talk to you. Very interesting year it's been so far. Today's interesting too. But one thing that's really caught my attention over the last couple of months, and it has of everyone, of course, is Bitcoin. But one thought I've had about it is, over the past couple of years, I've had several people tell me that they didn't think we would ever see an end to the bull market in the U.S. stock market until everybody started to trade again, like they did in 1999. Back in the late 90s, there was a mania in internet stocks and day trading. And I mean, you could go out with friends or out to a party, and people would be talking about their trading accounts, opening them up for the very first time on E-Trade and other online brokers. And what's interesting is I've always kind of dismissed that kind of thought when someone would tell me, oh, everyone's got to do that again, and there's got to be this massive mania. But the funny thing is, it actually is happening again. There is a mania, and it's not just the United States, it's all over the world, in people opening up accounts to trade. The difference is they're not trading stocks, they're trading cryptocurrencies. Since Thanksgiving, in a 2-week period, there were over 300,000 accounts opened up on Coinbase. And I went and looked at the traffic statistics, and they were getting about 400,000 visitors a month in the U.S. back in April, and now they get 2 million a month. There's another one called CoinDesk, which has seen a triple in unique visitors a month too. But everyone you know is talking about this. It's on the TV. On my Facebook personal page, I see people that they're trading for the very first time in this stuff. So it's happening. This is a mania. I thought we'd never see it again, but people are back into trading like you haven't seen in almost 20 years. So it's quite a remarkable development. Now, what is a little different is if you look at Bitcoin alone, 50% of it is owned by only 1,000 people. That's according to Bloomberg. And then half the people that are buying it are doing it with $20 or less. That's what they're doing to open up their accounts.
Well, $20 doesn't seem to be that risky.
No, but it can lead to big risks. So there is an appearance on a C-SPAN, CNBC, financial securities regulator, and he's in the banking industry, and he said there's been a surge of people actually taking out loans and mortgages to buy this. The normal person's not going to do anything like that. But back in 1999, I knew of people that were buying stocks using credit cards, and then when the market topped out or the internet stocks topped out that spring, some of these people actually took out another card and doubled down. I heard, I got 2 emails from people that were doing that and asking me what to do. It was terrible. But I was also trading on internet or talking to people on Yahoo message boards about some of the stocks I was trading, and there were a couple times where people were boasting about, I'm going to take out a home mortgage and buy $200,000 of this thing. And so what I think happens in a situation like those internet stocks or with Bitcoin is people get into a market or they make a trade for the very first time, and they make a little bit of money, and they think this Bitcoin is like something new and revolutionary, just like people did of internet stocks. And at the same time, there's also all these predictions everywhere that Bitcoin's going to go to 100,000 or 1 million even. And, people are, running Bitcoin promotions or cryptocurrency promotions, making these kind of claims. And it's also been a very long time since there's been a real correction in the stock market. So I think a lot of, people just kind of have forgotten that there are risks in the markets and you can lose money. And then at the same time, some people are doing, they're making money for the very first time. They're getting excited and they're going to hear these predictions that Bitcoin is going to go to 1 million and say, well, this could be my chance to become a millionaire and make a gamble, mortgage my house, buy more with a credit card or whatever. So it's a strange situation where we are getting something like a mass mania in the financial markets, but it's centered around cryptocurrencies and Bitcoin, not buying stocks or gold or silver or commodities. So but I think it's a sign that we're the public is in, so to speak. It doesn't mean it's going to top next week or the Bitcoin's going to top of the stock market, but I think this is a big warning sign for next year.
Well, whatever happened to that old saying, never invest what you can't afford to lose?
Well, it's people just, some people just go crazy and they want to gamble it up and they get convinced that these stories are true. I mean, back in the 90s, I heard that the internet was going to, make all these revolutionary changes, and some of which was definitely true, but it, wasn't what some people dreamt it was. I mean, there were articles back then basically saying if you buy internet stocks, they're going to go up forever and you're just going to, print money or feel like you have a money printing machine. And this Bitcoin thing is very similar. I mean, these people are claiming that it's going to replace currencies, it's going to replace central banks, it's going to revolutionize everything. And not only that, but there's a widespread belief that Bitcoin and these other cryptocurrencies are sort of a safe haven, that if there is a stock market drop, that they're just going to go up anyway. And they claim it's like a hedge against the dollar or financial risks. And those claims are absolutely baseless, and they're not true at all. In fact, the other week I looked and did a correlation analysis of how does Bitcoin trade against other asset classes. And Bitcoin does not go up when the dollar goes down. There's actually no correlation between the trading action of Bitcoin and the U.S. dollar. In contrast with gold, there is. When the dollar is in a bear market, gold tends to go up, and for people, understand that. But it's just a mythical statement that Bitcoin is, somehow going to go up if the dollar drops, and there's absolutely no evidence of that. It's just a magical belief people have. And as far as like a safe haven from the stock market, what's fascinating about Bitcoin is it's almost completely correlated with the U.S. stock market, or the NASDAQ in particular. I looked at a 100-day moving average indicator, the prices of Bitcoin and the NASDAQ, and they're correlated almost 100%, correlated 90%. Now, what's really happened over the years is that there was actually a huge rally in Bitcoin in 2012 and 2013, and then it crashed in 2014. And of course, what's happened this year, it's gone crazy. But what's interesting is those big drops, and there's another one with Bitcoin, and it happened in 2015 in the fall. These big drops in Bitcoin coincide with corrections in the stock market. Like the NASDAQ will pull back 10, 20% or something, and Bitcoin completely crashes. But then when the NASDAQ, has a year where it goes up, Bitcoin goes totally crazy. So that's another way it's actually very similar to the internet stock sector in the late 90s. The Dow with S&P would go up, or even the NASDAQ, the internet stocks would just go completely nuts. I mean, they'd go up 300, from $50 a share to hundreds of dollars a share. Some even hit 1,000. So it's very similar. And what I think that can tell us is next year, it could be that Bitcoin goes up more than these other cryptocurrencies, but if they have a bust, it would be, I think, a warning sign, much like the tech stocks went bust in April 2000. The U.S. stock market held up, but didn't really, fall until the following September. That's when the S&P tipped over. So if Bitcoin crashes at some point, and I don't mean just fall to 10,000, but go up more and then crash, that would be, I think, a warning sign that this environment of absolutely low volatility that we've experienced in the financial markets for the almost 2 years now is over, and we have to be much more careful. There's one other thing I do want to add about this whole Bitcoin thing. If you go, there's a website, coinmarketcap.com, and if you go there, what you'll see is all the other cryptocurrencies that are trading, and many of them will be up 30% a day or down 10%, making all these huge movements. And there's a lot of people trading these and not just trading Bitcoin. They think, well, this one might be the next Bitcoin. Well, there's over 1,300 of them. And one of the things that's new is something called an initial coin offering. And this is essentially the creation of one of these currencies. So what's been happening is a company will say, we want to raise some money, and we're not going to issue stock. We're not going to borrow money from you. We're just going to create a cryptocurrency, and you buy that. And that's how these things are being created. Now, they may go up more or whatever, but this is probably one of the craziest type of securities that's ever been created in the history of finance. So if you buy a stock, you have an ownership stake in a company. You can get a dividend. If the company gets bought out, whoever's doing the buyout's going to buy your shares and they'll go up. So, but you have an ownership stake in the company. If you buy a bond, you're basically lending money to a company. If the company goes bankrupt, bondholders have a right, in the court, to get some of their money back. What's funny about this initial coin offering is you have nothing. You have absolutely nothing. You just what's literally happening is a company's issuing their own currency and the people are buying it with the expectation it's going to go up like Bitcoin, but they have no right to anything. They're never going to get a dividend. If the company issuing the currency were to get bought out, they'll get nothing. All they have is, I think, these are like fake currencies. So it's like, it's like the craziest thing I've ever seen. When you really think about what is being traded here, there's absolutely no intrinsic value at all, except for the hope that this crypto thing will go up and be the next Bitcoin. And they got you go on this website, they got crazy names like PayPal, Casino this. I know this will make a lot of people angry because as I said, there's a rush for people to trade these cryptocurrencies and, get in on the next price movement. But what the people are basically buying a virtual currency is garbage. Now it's not trading like garbage, but I think when Bitcoin ends up, I think it can go up more. I mean, there's a mania of people getting in to buy this, but when it tops out, all these other currencies and probably Bitcoin itself, they're going to crash and collapse, and the intrinsic value of these things will, the currencies will go to their intrinsic value, which is nothing.
Sure, if you invest in real estate and prices go down, you can always still just live there.
Yeah, you have a house. I mean, that's the funny thing. We've seen in the last bull market, there was a mania in flipping real estate in the United States and house prices going up and so forth. But there was a house. Like you said, you could live in the house, and if you lost the house, there's still a house. I mean, there's something there. Someone's going to live in it. With this, it's literally nothing. It's like this is like one of the weirdest and craziest bubbles ever. It's almost like a pyramid scheme or something, or a confidence scheme. As long as people believe And I guess that's the truth of any paper currency. As long as people believe in the value of it and so forth, people will continue to use it. But what people are believing in with these isn't simply that these are good currencies or a medium of money, but that they're going to go up and up and up and up in value exponentially at the same rate they've been doing the past year. So if people, I'm not trying to tell people, it's topping today or don't do it, but be very aware of what you're getting into.
Yes, a friend of mine gave me a 10,000 baht note. And I said, what's that really worth? He said, 75 cents.
Well, at least he's, honest about it. But the other thing about it is there's also been, of course, a talk that I've already kind of said of why I don't believe it, but that Bitcoin is going to replace gold, and again, I don't believe any of that because it's not correlated to the dollar at all. It's not trading, as a hedge or anything of the sort. And also, I saw on Bloomberg and also read somewhere they've done studies that show that there hasn't been a meaningful actual exodus out of gold ETFs and into Bitcoin. I mean, in reality, gold went up a lot last year, but this year it's just been pretty much going sideways all year. A range of resistance of 1350, you support probably 1240 or so, and there's no collapse in gold or even mining stocks. It's just been going sideways. However, I think they're actually good investments now, because the Fed raised interest rates this week. The Fed fund futures say there's a 60% chance they'll do so next summer, and then maybe one more after that. I know there's some economists predicting 3 or 4 rate hikes, but the market typically is more correct than they are, and I believe the market, and the reason why is because the gap between long-term and short-term interest rates is narrowing, and it's even today or this week when Janet Yellen gave her final press conference, she talked about the yield curve, which is the gap in these rates is getting smaller, and the Fed can only really raise rates 2 or 3 more times from here without tipping the yield curve. So we're just at the end of the rate hike cycle. And when you get to that situation, gold becomes a good hedge against the dollar. The dollar tends to weaken when the Fed stops raising interest rates, and any dip in the stock market economy will weaken the dollar. It causes the Fed to actually announce they're not going to raise rates. So right now, I think it's actually a great time to buy gold or mining stocks, and I'm really looking forward to next year. I know they've gone sideways this year, but I really think we're going to see a rally from here back up to that 1350 level, and if we go through it next year, it's just going to be off to the races because you'll have built a base for over a 12-month period, and that's following a major bear market bottom, and that's really one of the best times to invest in anything. So I think next year is going to be real interesting for gold.
We'll have more with Mike Swanson right after the break.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic engineered gold mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
Welcome back. We're chatting with Mike Swanson. Mike, how do you see the proposed tax cuts in the U.S. helping business, or will it?
Well, it's tough to say. It's a strange tax bill because it does cut interest. Well, first of all, the way it looks like almost 47% of the American people are going to actually experience a tax hike when you take away their deductions and everything. And then those that do get tax cuts are actually going to have those tax cuts expire in a couple years. But the corporate tax cuts are permanent. And most corporations have actually pledged to use the tax cuts to increase dividends or do share buyback boosts. And we've actually seen that start this week. Boeing announced a big, gigantic share buyback boost, and their stock was the top performing stock in the Dow. And I expect we're going to, it looks like the bill's going to almost be certain to pass. And I expect next month when the earnings come out, we'll see many companies announce share buyback boosts. So I think it can help the stock market, definitely. But as far as helping workers, they're not going to get pay raises from this. It's just not going to happen. And as far as the real economy goes, it's tough to tell. The Trump administration didn't really put out any meaningful economic projections at all about the deficit of the economy. And the economists who have, they're like claiming it's going to add 0.5% to GDP growth. So I don't think that's enough to really be a game changer in the U.S. economy or not, but I think it could definitely help the short-term performance of some of the big cap stocks.
What about the looming U.S. deficit? Any thought on that?
Well, deficits aren't a problem till they are a problem, and part of the tax bill is to, allow corporations to bring money back into the United States, but that will be taxed at a one-time rate, really low, and that money will be used, to help fund the federal government for a year or two. So there'll be a temporary help, a couple $100 billion. I've seen estimated $500 billion, to help, additional tax money for the federal government from that offshore money coming back. So probably will help the deficit for a period of time. But I do think, the real problem is the future. The next time there is a recession, or a bear market in the stock market, or both really at the same time, I think it's going to be really tough, economic cycle because, some of these tax cuts, particularly ones to individuals, are tied to the deficit, and it's likely to really widen, when the economy slows down, whenever that happens. It could be in a year. It's can't really predict it.
We'll have more with Mike Swanson right after this.
I'm Bill McWilliam, president of Cascadero Copper, CCD on the TSX Venture Exchange. Cesium is one of the world's rarest metals with a growing industrial demand. Drilling is underway on our Tehran property in Argentina to prove up a cesium resource. Cascadero's patent-pending leach process has the potential to make Cascadero the lowest cost supplier of cesium in the world. Visit our website, cascadero.com, or phone us at 604-924-5504.
Keep informed. Receive our weekly recap of thought-provoking articles, podcasts, and radio delivered to your inbox for free. Sign up for the HowStreet.com weekly recap on our homepage, HowStreet.com.
Welcome back. We're chatting with Mike Swanson. Mike, getting back to Bitcoin for a second. The South Korean government says because it's purely speculative, right now I guess they don't tax gains that you make when currency improves in money or in value. They're thinking about putting a capital gains tax on Bitcoin.
Well, it makes sense to me. I mean, I think, I don't see why. If they're going to tax stock gains or any other normal capital gains, they should be taxing those too. But there's some mania going on apparently in Asia too in regards to Bitcoin, where in the U.S., looking at the traffic on these websites and Google search data and so forth, it appears to me there's like between 2 and 5 million people in the United States that are trading these cryptocurrencies. But apparently in Asia, it's many, many, many more people, and something like 80% of all cryptocurrency transactions are coming from Asia. And, if you can recall, a couple years ago, the Shanghai stock market crashed, and there are all these stories of people, that had borrowed money to buy stocks, and they got really, they went bankrupt, and really sad stories. And I think, in a way, I talked earlier about Americans borrowing and using credit cards to buy these things, but for whatever reason, this seems to happen more in China and Korea and in these Asian countries than it does here. I recall in the 90s, too, there was an Asian economic crisis where their financial markets crashed, and there are all these horrible stories of people who, borrowed money to buy stocks. So I think that kind of stuff is more prevalent for whatever reason in those countries. So the gist of it appears to be that South Korea is trying to take steps to discourage people from engaging in extremely reckless behavior in these financial markets. And I think that's really a good thing.
Also, too, there's the risk that governments might ban them.
Yeah, I kind of doubt that's going to happen. I saw a statement made by the head of the Chinese central bank where someone asked him, is Bitcoin a threat to central banking? And he basically said no, we're not going to do anything about it because when it crashes, no one's going to want to use it. I think that's the ultimate outcome. However, if the Bitcoin believers are correct and these currencies are really going to displace central banks, I think they would be banned, as you said. There's, I think, an illusion that people can just buy the Bitcoin and escape the eyes of the authorities. This Coinbase brokerage account has received notice from the IRS that they have to turn over all their records of people putting the money in there, and taking money out. So, for tax purposes. So I don't really think you can escape the eyes of the government. And if Bitcoin really was a big danger, in reality, someone like Donald Trump won't like it. He's a nationalist, whatever you may think of him. He's not going to think, these Bitcoin traders are great. So, I'm not going to do anything if they hurt the United States or the Federal Reserve or whatever. He would actually do the opposite. And imagine a situation where the stock market's crashed or there's this financial turmoil and Bitcoin goes up. Well, Trump would probably blame the turmoil on the Bitcoin players and say they need to be put in jail or something. And he's got a strong core following, and those people would agree with him, believe whatever he said. So I don't really think Bitcoin is a way to escape, whatever. I don't think it would work anyway. I just think it's going to crash. I don't think it's a safe haven or replacement for central banks. And one last thought along those lines too is a lot of people have the idea that, well, if I just don't use the U.S. dollar or the Canadian dollar or the Chinese yuan or whatever, and I could use this other currency, I'm escaping central banks and it's some sort of freedom. Well, in American history before the Civil War, there was an era called free banking in which there was no central bank, and there was something like 700 individual banks that sprout across the United States, and they would even issue their own currency. They would say, we got silver reserves or gold reserves, and we're going to, use our currency and give loans to farmers or businesses and whatever, and hundreds of these things. So there are all these competing currencies across the U.S. for about 20 years, and what ended up happening was all these currencies became worthless because a lot of these banks overextended themselves, just like the ones did in 2007 and went bankrupt, and these currencies were just junk, or they turned into junk. So that's the problem. I mean, a currency in the end, it still needs to be backed by something. And today, I mean, we do have faith in the U.S. dollar. That may go away, if there's a debt problem or whatever. But it wouldn't be the first time. During the Civil War, there was U.S. greenback. We don't spend greenbacks. We don't spend Confederate money either. So currencies come and go, and to put all your life savings into one currency, or think that, some new currency created by some internet guy is going to provide some sort of economic salvation in time of crisis. It's just really because it's kind of far-fetched.
Mike, thank you so much for chatting with us.
Thank you. Good to talk with you.
My guest has been Mike Swanson, editor of WallStreetWindow.com. You're listening to HouseStreet.com radio. Find us on Twitter at HouseStreet. Our YouTube channel is Talk Digital Network. Questions for the show or our guests can be sent to info@HouseStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HouseStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HouseStreet.com radio is a production of House Street Media Incorporated.